In this week's video, I'll be going over the important data sets, earnings, and doing a technical analysis of the SPY and overall market. I am streaming between Monday, Tuesday, Thursday, and Friday from 9:15 a.m. to about 12 p.m. Eastern Standard Time. Thank you all to my supporters, and with that said, let's go ahead and get straight into the video. We do have a big week for the data. But for Monday, it is Memorial Day, so the market will be closed and there will be no major data sets unless there's something that President Trump tweets or, something going on with the conflict. However, for Tuesday, we have the housing composite data. I'm not too worried about that. Um, I am interested in the CB consumer confidence because again, this is a soft data set, meaning it's opinion based, but it's been pushed to a very low level for an extremely long period of time. It's just over the last couple months with the oil volatility, just basically climbing up a little bit above that 89 range. However, the forecast is showing that we are expected to go back down, and I agree with that, with the yields pulling back upward, with inflation being, scary again. I definitely agree that consumers are going to be pulling back. Now for Wednesday, we don't have too much going on. We basically have the ADP employment change weekly. Um, this is just the weekly level, not the monthly level, so I'm not too worried about that. Not too worried about the bond auctions right now either. So Tuesday, Wednesday, not very big data set days. However, for Thursday, we have a ton of data. So we have the core PCE data, we have the quarter 1 GDP data, um, the jobless claims, more PCE, we have the personal spending. Yeah, a lot of data sets. So I don't really have an opinion about what's going to be happening with the PCE. It's the personal consumption expenditure index, which I do expect that to be moving upward in the current moment, unfortunately. Um, Mainly because the oil prices have been basically a massive weight on the entire market. And this means that the dollar has been rising. With the dollar rising, with the yields rising, prices are going to be rising, which means that personal expenditures are going to be very likely on the up. So something to, pay attention for that potentially we could be getting hotter data this week. Um, Mainly because of the inflation scare that's going on. Now for Friday, we don't have too much important data, mainly the Chicago PMI. I do believe the Fed chair gets sworn in on the 26th. I'm not entirely sure about that. We'll talk about that on Tuesday's stream. But primarily, this week is all about Thursday, but Thursday has massive, massive data sets. I mean, again, we have the GDP, we have the PCE, um, just a lot of very, very impactful data sets for the market. So am I expecting the market to react to all this? Absolutely. And again, all this data comes out at 8:30. On my time frame, it's showing literally my time. It should not be doing that. It should be showing Eastern Standard. Where's New York? Anyway, I'll get that solved, but this isn't the current time. It comes out at 6:30 a.m. So, um, or excuse me, 8:30. So about an hour before the market opens. So we will have a very drastic reaction to what's going on with the data sets on Thursday. Now for the earnings this week, we don't really have a whole lot going on. We did have, Nvidia last week, and of course that was very, very large. However, out of this week, some of the ones I am looking at is Zscaler, large company. Salesforce, that's always super important to pay attention to, even though they're not having the market cap of these AI companies. They're still one of the most front-facing companies in terms of the overall American consumer that you can have. So very, very important to be reading their guidance. We do have Snow, we do have Marvel. Um, Really, I'm not too interested in any of those. What about Thursday? We have Dell, Costco. Costco will be interesting, but that's kind of the same reason why I'm interested in Salesforce. Not really because of the actual earning itself, but more of just the guidance of what they're seeing out of their customer base and what they're expecting out of their customer base. Dell might be interesting, but it's not something I'm interested in currently. So overall, not a very important earnings week. Um, it was mainly last week, but next week, however, is very important. We have crowd control, we have Broadcom, we have Lululemon. We have a lot of very big companies coming out next week, so those can absolutely move the market. But yeah, that's for the earnings this week. Now getting into the overall technical analysis for this week, I do want to show one thing is that the ES main has gapped up. Oh jeez. I had to reinstall a lot of stuff on my laptop. So with the gap up here on the ES main, this has now closed this cup, which this template is supposed to be different, okay? I'm going to be having a lot of issues over the next few days. Just, we're all going to have to bear with it. But this cup has closed, okay? And what do we expect from a closed cup? We expect a handle downward, okay? So that we can head higher. Now, with that said, and let me go to the SPY here, and clicking over to the SPY, we can see that this cup has not closed. Okay, so what this is telling us is that with the ES main essentially closing that cup is that our expectations and anticipation should be that we close the same cup. Okay, with that said, does that mean we get an upper Bollinger push here? I think the potential is very large, and while you won't be able to see the Bollinger and moving average levels, I will go over them. The upper Bollinger is currently at 755.24, and very likely that's going to be very close to that level. It might pull up to 756. I don't think we're ready for that push yet. However, one thing we do have to be aware of is, again, at the top of a completed cup, we are always anticipating bearish structure. That bearish structure generally has to build above the cup. So could we get a 2D, upper Bollinger push to create that bearish structure at the top while, you know, filling out that cup completely? I think that's very well within the cards, especially with a lot of the good news coming out of the Iran conflict. Um, I would not be surprised to see a daily upper Bollinger move occur, especially since we had a pretty large rejection of this 20 mile range. This was something we were all looking very forward to. However, semiconductors kind of pushed us away from that move, and we did discuss this last week and in the stream as well. But let me go over to SOX. I don't know why my Weeble keeps messing up. Okay, anyway, going over to semis, we see that semis actually did test that 20 mile, and because they tested that 20 mile, it gave the entire market enough, enough momentum to bounce off of that level to where QQQ and SPY did not have to test that level. And ignore some of these notes, these are from last week, but that gave SPY and QQQ enough momentum to reject those levels and bounce upward. Now again, the SPY and QQQ have not tested that 20 mile in over 40 sessions now. It's extremely rare. In terms of a rally, this is probably one of the strongest rallies we've seen on Tech and SPY because it refuses to do a support retest. Now, with that said, with this cup closing, with this handle potentially building, we can see that support retest happen. Now, one thing about the support retest that I do have a very large concern about is that we see the 20 mile pulling upward. Okay, and I'm going to change this to purple. It's not going to be the exact same purple because Weeble messed up everything after I reinstalled it. But with this handle at the top potentially building, we can head down, do a 20 mile test without invalidating this cup here. As you can see, there's still plenty of room at the bottom of this cup where if we see the 20 mile continue pulling upward, which it will be, the price has been pulling upward, that 20 mile will be pulling upward, that we may not even invalidate the bottom of this cup. We might bounce upward and continue pushing. Okay, so that's something that we have to be very, very concerned about, is that many are expecting this to kind of be the blow off top, the melting top, whatever you want to talk or whatever you want to define it as. But I'm still seeing a lot of liquidity to continue pushing upward. One of the main symbols right now that we are watching for is for NVIDIA, and I'm just going to delete. No, I don't want to delete all the drawings because there is a very important liquidity range in here. But we do have this very large head and shoulders on the hourly. Okay. Now, this head and shoulders has been trying to continue pulling downward and building bearish structure. And if that happens, if that continues to pull downward, then it's going to head to that 196, okay, because it's going to complete this inverse cup slash major head and shoulders. Now, when that occurs, that gives us the liquidity to once again pull back into this very strong consolidation channel. I'm going to mark this as white just so that everybody understands that is the consolidation channel. And with that consolidation channel occurring, this right shoulder can occur. So if there's going to be a very large tech sell-off, NVIDIA will be one of the first ones telling us that's going to be the case. We will see a lot of this bearish structure continue to push downward and NVIDIA continue to consolidate within this major consolidation channel. That's one of the main signals I'm looking for over the next few weeks, is for NVIDIA to start losing major levels. Now with QQQ, it's almost the exact same thing with SPY here. We have this cup just about closed. Come Monday, or come Tuesday, excuse me, very likely we see this cup closed unless we get some bad news out of Iran. And what does that mean? It means that from the top of this cup closing, which is at the basically the 723, um, that only puts us $15 away from the upper Bollinger. Now, can we push that level before pulling back downward? Absolutely, especially when we've been changing our moving averages from bearish to bullish. Now, QQQ and SPY are sharing the exact same pattern, where we did have the 5-MA pulling underneath the 10-MA. We did have the 5-MA starting to pull to the 20-MA, but that very large bounce out of semiconductors really carried the market. And as of Tuesday, the 5-MA will be above the 10-MA again, both on QQQ and SPY, which means that the moving averages will be bullish again. And not just bullish, but short-term bearishness entirely wiped out. Okay. Um, that's a major concern, because what happens when we test the 5-MA, which we did on Friday, and what happens when we test that level and there's no more support above us? That means that we need to look at the upper Bollinger again. So as bearish as I've been, it was for this support test that we did not get. Unfortunately, there's no way out of that. We just did not get that move. The market got very close, but semiconductors bounced us. Because we did not get that move, we now have to target this upper Bollinger again. Okay, either we're going to have some major consolidation, or we're going to be targeting this upper Bollinger. And this will be something we talk about during the stream more as we, hear more data over the next few sessions. As the market starts opening come Tuesday, we will have a much better picture. Now, one thing I do want to discuss is, besides the overall bullishness that I'm seeing out of SPY, I want to kind of discuss the overall macro conditions right now. Is that with oil starting to potentially pull down again, that creates the condition for precious metals to start rising. So looking at gold and silver, hold on one moment. And let's go to the daily time frame. And I just want to turn off the moving averages. We can just look at the Bollingers. We see that gold pushed down to the lower Bollinger here, which creates a major buying range. Okay, so potentially we could be seeing major buying out of gold. And again, I've had a price target on gold, not the ETF, but the actual, commodity, to be around that 6,300. And I still stand by that level, very, very, very much so. Um, This is actually a dip I've been buying into. I've been buying a lot of GDXY and GDXW. These are weekly dividends. They're very, very nice. But once we hit that lower Bollinger, for me, that was a very crucial level to start buying up. And very likely, I'm going to try to position some gold longs, meaning about those 500 strike leaps, maybe for about December, September, somewhere around there. I'll have to price it out. But I do want leaps for this upside because even though we're facing a slight inflation fear right now, um, again, oil is one of the fastest pulling down commodities out there. And if this crisis is truly going to be over, then we're going to see oil just absolutely drop. And a lot of people question me about that and say, why do you think that's going to be the case? Well, oil has been manufactured to be pushed up on the upside, but that also happens to the downside too. And from nation states to banks to just individual investors, it's in everyone's best interest to pull oil downward. Okay, oil being upward and creates short-term inflation, and it really drastically messes with a lot of the global economics. And that's not something that usually can be sustained for a very long time, okay, without major issues. Now, with this, I do expect the oil prices to pull back to basically between that 65 to 75 a gallon or a barrel. Um, However, I do think that there's going to be massive short positions being taken on oil, just because it is such a massive, or such a quick falling commodity that we could kind of see an inverse short squeeze where it is basically a gamma squeeze to the downside. Rather, everyone assumes squeezes only work one way, but you can have negative volatility squeezes as well. Okay, and we've been in a very positive volatility environment for an extremely long time now, and there's going to be a boatload of people, including myself, shorting oil, expecting it to go down quite a bit. Could we see it being pulled all the way back down to this 54, 55 range? I think that's very well within the cards. Do I expect that anytime within the next few weeks? Not really. I do expect this to happen over the next few months once the conflict is fully over, meaning, some signature of a peace deal, no more volatility. We have the Strait of Hormuz open, and basically everything is running good again. Because again, with oil, this has been a manufactured supply constraint. Okay, this hasn't been supplies running out. This hasn't been actual issues with the oil production. This has just been the Strait of Hormuz being closed. Once that opens, oil's going to be flowing like crazy. Okay. And with oil flowing like crazy, that's going to be a very large short position for many just massive investors. Again, you're going to see nation states shorting oil. You're going to be seeing major banks shorting oil. You're going to be seeing some of the largest investors out there shorting oil. Um, I currently have 20,000 drip shares and I have USO puts. So I'm shorting oil a little bit as well. And we really do expect some major downside to oil within, again, the next few months. I know a lot of people are assuming that oil's kind of priced in right now, inflation's high, things are going to go higher. This happens almost every single time we see oil elevated, and all of a sudden we get some deflationary spike to the downside. Um, that can very much be the case again. So just be prepared for that. Doesn't mean I'm correct, but it is something that historically usually occurs when we see major upticks in oil. So I am looking forward to that. Now, with that said, what else do I want to cover? Treasuries. Treasuries are a big deal right now. And even with, I'm gonna hide the drawings. Um, Even with the oil volatility possibly getting ready to really pull down, we have a new Fed chair. And within the Fed right now, there's pretty much only hawkish members, which means that they're leaning more towards rate hikes. Now, if we do get the massive deflationary push downward, will they see the need to hike rates? I don't think so, but I do know that many of them are sitting in the very exact same boat of let's hike rates, let's break this inflation for good, let's get the job done. And I think we're going to be hearing about that quite a bit over the next few months. So even though I'm usually the TLT bull, um, I've been talking about TLT for years now. I'm actually wanting to start shorting TLT for the long run, just in case that occurs. So come Tuesday, I will be looking for some positions. However, we do need to wait for this to pull upward a little bit. It's currently at the low, so I do want to see this push above the 20 MA slash head up to the upper Bollinger before we take those dated shorts. But come Tuesday, I'm going to be closing all of my TLT long positions, all of my TLT dividends. I'm going to be exiting the treasury market in terms of US treasuries. Now, the market that I do like a whole lot is the high yield bonds or the high yield corporate bonds slash investment grade bonds. So I will be putting a lot of positions into HIG-W. I don't have it on this screen. Where's my dividends page? Dividends, HIG-W. So this is the one I'm going to be putting a lot more weight into, because even though we could be seeing U.S. Treasuries dropping like a rock, U.S. equities are very, very likely going to be seeing considerable upside. And we're seeing that through many different metrics. And again, I know many people are saying that they believe this is the, quote unquote blow off top or melting point or melting top, whatever you want to, describe it as. I kind of disagree right now. We still have to get through this oil volatility before we start seeing equities really suffer. Now, one thing to finish tonight's technical analysis over is that the Bank of Japan still wants to unwind positions. They still want to intervene in the yen and pull the yen price up, and unfortunately, they're not going to be able to do that until the oil volatility breaks. Now, when oil volatility breaks, the Bank of Japan absolutely will be trying to intervene in the yen, which means that they will be selling US treasuries, they'll be selling equities, they'll be selling crypto, you name it, they'll be selling it. So that can absolutely be a bearish, um, a bearish cycle coming up fairly soon here. But the current cycle is telling us that we're going to close this cup, build a handle, and very, very likely potentially push up to new highs. So that's what I'm looking for in the current sense. Now you can see my bar down here that usually has the ADL, which is my most beloved indicator. However, when I reinstalled Webull on my laptop that blew up, it no longer has the ADL. It has something called the OBV, which works very similarly, but it's still not the same. So it will track sort of what the ADL is tracking, which again, we're seeing a spike here. We've been seeing consistent climbing pretty much ever since that initial ceasefire uh, was issued. So with this OBV continuing to climb, it essentially works the same as the ADL, slightly different, but it works very, very similarly. Um, we can very much so be expecting all-time highs again. Um, I'm willing to be wrong on that. And one of the things that I'm going to be doing is adding to my SPACU positions. And these are only for equities, okay? I'm not going to be adding to the contracts on this. I'm only going to be buying the equities. And this is a hedge to my account. So again, a hedge is basically insurance so that if we see the market start, really pulling down, if I'm incorrect about us getting ready to push to all-time highs, SPACU is going to help catch that. SPACU will gain while the rest of tech and everything drops. So I will be slowly adding to my SPACU positions. Again, I am holding quite a lot of drip positions right now. Let me circle to drip really quick. But currently I have a little above 20,000 shares. I have 20,200 shares. Um, I'm I'm really looking for this to pull up to about the $7 to $11 range. I think that because we have the odds of a inverse gamma squeeze, we could be potentially seeing this move all the way to the 10, 11, 12, $14 range plus. So I really, really, really like drip positions. I think that it's still extremely cheap, and even with all the volatility we've been going through over the last month, people have been getting on my case about buying drip, which I don't really care what people say anymore. But even with all the volatility, we've only been seeing this price shift about $1. Okay, so if you're worried about buying it, I personally, I'm not worried about buying it at all. Obviously, I have 20,000 shares. I'm very ready to go when it comes to this. Um, if oil volatility is defeated, we're going to be seeing this skyrocket, and my contracts and shares are going to be doing absolutely awesome. So I'm very, very invested in shorting oil right now, and I think it is probably one of the better opportunities throughout the entire market. Um, with that said, I'm going to go ahead and end the video here. I hope everyone has a great week, and again, I will be streaming Tuesday morning, 9:15 a.m. I did teach a day trading class on Friday. You could watch that VOD. It's only about 3 hours long. Um, Goes over very, very strict day trading mechanics where we were able to take 3 very easy, um, structured and consistent wins. And throughout this entire next week, I will be teaching these classes. So I hope you all are able to join those, and I look forward to seeing you. But other than that, thank you so much for watching. Thank you so much for supporting my videos and my content. Thank you for sharing it with your friends and everybody else if you enjoy it, and you feel that others can benefit from what I have to say. Please, please, please share my content. I'm trying to really grow my channel right now. Um, but enough of the shameless promoting. I hope everyone has a wonderful week, and I will see you all on Tuesday morning. So take care, everybody.